Bevan is Chief Investment Officer at CCLA. He oversees more than £4 billion, including Sainsbury shares, and he joins me now. James, thank you so much for coming in. Now, it was interesting to speak to Justin King. He seems pretty optimistic that they can actually manage costs, and in the future, it was one of the first times that I heard him mention a competitor and saying, we're doing okay.
He's coming from a relatively low base, that said. And it's very easy to say, yes, our performance is rather better than Tesco in terms of the movement. But if you start from a much lower position in terms of non-food, very straightforwardly, you can grow, and that's what he's playing catch-up with. I think he's been quite sassy in the pricing position of some of his propositions. So, for example, as we know, he sold a third of the King's Speech DVD in the first week of sales, and that's all to do with pricing, positioning, promotion. And I think they've got that spot on. Key from the shareholder point of view, of course, is what's in the share price, and I think that Sainsbury shares have been fundamentally overlooked, therefore represent excellent current value.
So you think that it's still overlooked at the moment? How much upside can it still get?
You know, I think if you look at Sainsbury shares in terms of either sum of the parts or discounted cash flow, dividend discount model, any of the more traditional fundamental techniques, you can work out a valuation in excess of £4. Actually, I think one's probably talking about a near-term stop at about £3.60 because we have some very serious consumer headwinds in the UK, of which we are all deeply aware, of which the high oil price, petrol prices, pumps, clearly dissuading consumers from going out and shopping.
Which is also, Justin King was mentioning, so at £3.28 actually does seem like good value if you believe that the target is £3.60. James, talk to me about Inditex, because this is also a company that actually seems to be doing no wrong. It keeps on expanding, and because it churns out fashion so quickly, it makes it attractive. Yeah,
my take on Inditex is somewhat differently. The numbers came out pretty much in line with what was expected. Where I think they are at risk is that they still have well over 40% of sales from
Spain,
and Southern Europe generally. They are reasonably dependent on continued expansion of China. I think capital expenditure will continue high, and I see the shares now as relatively expensive. I mean, they're up about 10% in a year to date. I think actually it's now time to take money off the table for Inditex, and for cautious investors, I would say, look, actually the party's been great. This might be the right moment to sit this one out.
James, and yet today they were saying that actually it's online sales that did very well. So no matter what market you're exposed to.
But it is incredibly fashion-driven. They bet extremely well in terms of how the fashion trends would be. It's so easy, with the best will in the world, to just slip up, get it slightly wrong. The consumer is incredibly unforgiving. If the brands aren't spot on, your taste. And I do think that Inditex has had a very strong following. It's done brilliantly, but the share price is now very rich.
So how does it compare, for example, to H&M? Because those shares are down today, and it's very different. It's similar and yet different as a shop.
Well, the market is much more focused on the risk that H&M, in effect, is a one-trick pony. It's got one clear brand, one clear strategy. If that's out of favour, real problems. Where Inditex has huge strength is it has lots of brands, and therefore there is a degree of diversification in the retail proposition, which has stood it extremely well. My issue is only that the headwinds are sufficiently strong, notwithstanding that great degree of diversification and excellent management, they're just going to have difficulty in pushing the share price higher.
Do you look at Uniqlo at all? Because we also had figures from them, and they're in the UK now.
We do, and they've done extremely well, and their pricing point is absolutely spot on in the current market condition. My concern there is only that the pace of growth is so strong. Again, the capacity to under-deliver relative to now very extravagant expectations to the market leaves them relatively at risk.
Okay, so James, just to recap, you wouldn't be buying Inditex, H&M or Uniqlo?
Not at the moment, but I would still be a firm buyer of J Sainsbury.
All right, thank you so much, James Bevan there.